Greetings and good day. I hope you're doing great. I'm here with the daily analysis of the EURUSD currency pair for March 11th. As we saw last week, after the outbreak of war between Iran and the United States, the U.S.
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
dollar gained strength, and, at the same time, we witnessed the weakening of the euro. As a result, last week this currency pair closed the weekly candle with a 1.32% drop. Also, after the escalation of tensions over last weekend, we saw more than 0.5% further decline at the start of trading this week. At the start of this week, following news about the possible release of oil reserves by G7 countries, we witnessed a weakening of the dollar alongside a drop in oil prices, and as a result, the price quickly rebounded upward from the 1.1543 area. Currently, as you can see on the daily time frame, the price is trading in the OT zone and near the 0.786 level of the Fibonacci lines. Yesterday, we also saw that the price reacted to the daily BPR area and pulled back downward from that zone. In such circumstances, the impact of economic news becomes less significant, and financial markets are more influenced by news related to military tensions. We are currently reviewing the economic calendar. As you can see here, there won't be any major economic news for the euro this week, and today we have the news related to the US dollar's CPI and core CPI. However, as mentioned earlier, we do not expect this news to have a significant impact on the price movement of the EUR/USD currency pair. By reviewing the currency strength chart, we can see that last week the dollar was among the strongest currencies in the market. However, after the start of this trading week, following the International Energy Agency, IEA, proposing the largest release of oil reserves in history, we have witnessed a drop in oil prices as well as a decrease in the strength.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Strength of the dollar. Now, on the daily chart, we can also observe that the US dollar has retreated from its previously strong position and is now trading with a strength close to that of the euro. In addition to what has been mentioned, we need to point out that the release of oil reserves can only be a temporary solution, and the Forex market is still heavily influenced by fluctuations in oil prices. For this currency pair to be able to return to its long-term upward trend, we need to see a sustained decrease in oil prices, which will only be possible if military tensions subside. In fact, this move by the IEA could carry a hidden message for us, that the markets cannot expect a quick ceasefire for now, and for this reason, the conflicting signals we've seen have prevented the dollar from strengthening or weakening significantly. On the 4-hour time frame, we can also see that after the price increase at the beginning of the week, the price encountered a resistance zone at the daily and 4-hour BPR and pulled back from this area. We are currently analyzing the 1-hour time frame. On the low time frame, you can see that after the price made higher highs and higher lows, it failed to close above the BPR zone, reversed downward, and formed a low lower than its previous low. Following this move, we saw a lower high, and once again, a lower low was formed. In the short term, we consider this move as a change of character and expect the price to continue its downward movement. Accordingly, the price could once again rise up to the internal liquidity zone, namely the 1-hour FVG around 1.1625, and after collecting this liquidity, move downward. On the other hand, if we see a decrease in military tensions along with a weakening of the US dollar, the price could surpass its previous highs and enter an upward trend. Wishing you success and profitable trades.